The UK's Museums and Galleries Exhibition Tax Relief, or MGETR, lets eligible organisations claim back some of the costs of putting on an exhibition. Since 2017, it's paid out over £150 million across more than 11,000 exhibitions. But not every exhibition qualifies. So in this video, we're going to cover exactly what makes an exhibition qualifying under MGETR, the core criteria, the automatic disqualifiers, and the rules for touring exhibitions. For an exhibition to qualify, it needs to meet 3 conditions. First, it must be a curated public display of scientific, historical, artistic, or cultural interest. That definition is broad. Everything from a solo artist retrospective to a display of dinosaur fossils can qualify. Second, it must be open to the general public. That's paid or free admission, but it must be a genuine in-person public exhibition. Private showings and purely online exhibitions don't count. A larger exhibition can include some private or digital elements, but the majority of the activity needs to be open to the public. Third, there's a minimum UK spend threshold. For accounting periods ending on or after the 1st of April 2024, at least 10% of core costs must be UK-based. For earlier periods, the threshold was 25% European expenditure. There's also a separate requirement for your company itself. You must be a charitable company or a company wholly owned by a charity or local authority. The exhibition criteria and the company criteria both need to be satisfied. Some exhibitions will never qualify, regardless of if they meet the other criteria. These include exhibitions where anything on display is for sale or is a live, exhibitions where the primary purpose is to advertise goods or services, anything involving a live performance as its main focus, and anything connected to a competition. There are nuances. For example, a gallery can commission and exhibit work that the artist later sells after the exhibition closes, that's fine, and a merely incidental live element, like a fencing demonstration within a wider historical exhibition, may still be acceptable. HMRC's concern is when the live element is the main point of the exhibition. If live performance is central to what you're putting on, theatre tax relief is more likely to be the right scheme. Touring exhibitions qualify for MGETR and attract a higher relief rate, reflecting the additional logistics and cost involved. To qualify as a touring exhibition, you need at least 2 venues, at least 25% of the objects displayed at the first venue appearing at subsequent venues, a gap of under 6 months between the venues, and a primary production company in place. Both the primary and secondary production companies can claim at the higher rate. The variety of exhibitions that can qualify is genuinely wide. Solo shows, immersive installations, scientific displays, historical reconstructions, they can all qualify. The definition is designed to be inclusive. What matters is that you've checked the rules carefully before you file and you've kept solid documentation to support your claim. If you're considering an MGETR claim and want to check your exhibition's eligibility before committing, Myriad's team offers a free initial consultation.